And right now, folks, we're going to jump over to our man Steve Rhodes. Folks, you can head on over to the front page of TFNN. Right under the newsletters tab, you'll see Mastering Probability, Steve's Outstanding daily newsletter. You can check that out. All the newsletters come with a 30-day money-back guarantee. You gain access to a number of outstanding webinars. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing today?
I'm doing well, man. How about yourself?
Good. Happy Father's Day. Never a dull moment in the stock market, in the war market, if you will.
No matter what, Steve, we got green across the board. There's wars, there's rise in oil, and the market says, man, we're going higher right now. We'll see, but pretty. And how about and thank you for telling me, man. I checked out that first game when they were doing it in Canada for that national anthem. It was awesome, man. And boy, quite a cup. Florida Panthers. Marchand, man, it's just great hockey, man, to say the least.
Absolutely. And I just kind of, loosely reference. I hated the guy for 2 decades. Now I love him, right?
Some of those moves, Steve. 37 years old. The way he's shaking, man, off those faceoffs. It's and Connor McDavid, just outstanding hockey, man. Pretty amazing.
And without Marchand, I'm not really sure where Florida would be in this tournament right now. I mean, he's been such an impactful player. So looking forward to tomorrow's game.
Totally.
Would love to see the Panthers, close it out, but there's nothing wrong with the Game 7. So either way it works for me. But in the markets.
Talk to us about the market.
About the S&P. Yeah, you're talking about the S&P. S&P moving up towards its highs and so forth. So the question that I kind of throw out there for us to answer is 2025 a bullish or a bearish year for the S&P 500? And the question is, do bullish or bearish stock market years have anything in common? So that's what I wanted to share with you and the listeners out there. And the first place that I'll start, one of the tools that I use that I have access to, great tool, it's the seasonal charts that are put out by the folks over at SeasonX. And they've taken like the Dow goes back 127 years. And I used to have to do all this data by hand in a spreadsheet. It took forever. It's nice to have one tool where I can just punch up what I want. And here's what I have punched up. I punched up first. This is the analog, if you will, of years over the last 96 years. There have been 32 years that have been termed bearish. And one of the first things to note is that red vertical line on that screen there, that represents the January high. And in bearish markets, the January high never gets taken out. So that's important for folks to understand. There's also the opposite of this, which is in bearish markets, what we also know is that price starts trading below the January lows. And when we do that, they can lead to an overall bearish market. So just by simply having the seasonal patterns, understanding what takes place in a bullish market, what takes place in a bearish market, we have some clues out there to look for. So the January 2025 high, and I'm referring to the S&P 500 right now, the January 2025 high is 61.28, and thus far it's held. It was tested in the early part of the year, but that level is held. So we're not up there yet. Yes, we're getting close, but the key number for folks to watch, in my opinion, is 61.28.18 out there. On this chart here, we can see that price did trade below the January low. So if we take a look at January 2025, where my cursor is at, but, we're back inside that range right now. So it hasn't proven itself one way or the other just yet. But we know that we haven't traded above the January high. So I'd say that, we're leaning a little bit more bearish than we are leaning bullish. If we take a look at... If we take a look at 2023 and 2024, just so folks can get a feel for this, here what we saw was the January highs were tested. So price rallied in 2024, pulled back, test those January highs, and then continues to move forward. We had the similar type of thing back in 2023. It was not until the October low that came in. It's typically we get a low, Tommy, in October inside the S&P 500, and we did get a close below that January high. This is a monthly chart that we're looking at, or weekly chart that we're looking at, by the way. But I require 2 consecutive closes below support or 2 consecutive closes above resistance to be proof that it really is a breakout or a breakdown. Otherwise, it was a false move. In this case here, back in 2023 on the weekly basis, those white arrows show us it was a false breakdown message. So really important to watch the January high and low. So If we take a look at is 2025 a bullish or a bearish year? Well, as of today, I'd say the S&P, again, has got more bearish tendencies than they do bullish tendencies, simply from the standpoint of watching that January high. If we take a look at the S&P 500, here what's going on with regard to topping patterns. Here we've got a daily Rhodes Momentum Indicator top that makes 60.59.40 a key level. If price closes above that, it negates that signal and suggests that we move higher. If we take a look at the weekly time frame chart, the center, that's got a Rhodes Momentum Indicator top. Here, price needs to close above 61.47.43 to negate that signal out there. So really important to watch those levels. Each of the instruments that I use to track the S&P 500 have got daily topping patterns. Now, what I mean by that, folks, I'm referring to the S&P Cash Index. That's on your left. We've just rolled over into the September contract. That might be affecting the volume aspect that you're looking at, Tommy, on the futures contracts. Okay. You've got the SPYs, and we've got the equal-weighted ETF, which is the RSP out there. So the key support level. So we had the markets on Friday obviously move down, but what they didn't do was bust through any support inside the S&P 500. So levels that I'm going to share with folks here, really important to be paying attention to on any down moves. That'd be 59.93 on the ES Mini. Again, we just rolled over into the September contract, so that's a new profile level. The SPYs have got 5.95 and the equal-weighted ETF, which is really worth paying attention to, is 175.89. All those support levels held on Friday. If we start seeing price close below that, that starts to tell us we've got at least profile changes in trend. That should lead to lower price. But we're not there yet. You talked about the NDX 100 or the NQs. Here, if we take a look at the daily time frame for the NQ, the NDX 100, the Qs each have these Rhodes Momentum Indicator tops. The equal-weighted ETF has a Basil Chapman 7th wave top. That's the letter G that's out there. So each of these still have tops that are in place. So what are the key support levels to the downside? Because resistance, if price takes out those resistance levels, we're going higher. But what do we want to watch to the downside? In the NQ, it's 21.940. In the Qs, it's 525.48. And the equal-weighted ETF, QQEW, it's 131.96. If we look at the monthly QQEW, it's got profile resistance up here at 133.89, and the weekly is trading into its Rhodes Momentum Indicator top. We've got significant resistance here in this 131.96, 133.89 area. So that's what I would suggest that people are looking. They should really pay attention to the equal-weighted ETFs. The reason is the equal-weighted ETFs typically give us the true picture or direction of the market, where things are headed to, versus the weighted instrument like the QQQs out there. The only daily Dow chart that actually has a top is the equal-weighted ETF. The actual September futures contract doesn't have what I refer to as any kind of a top out there. Neither does the cash index. Neither does the Dow Diamonds. But the equal-weighted ETF does. So that says we really got to watch support in the area of 36.58 to 36.65. Your price closes below that, we start to head much lower. Remember, we have not taken out those January highs. So I still am with the premise that right now, market conditions, even though we've rallied back nicely, until we take out those January highs, we're more leaning towards a bearish market than a bullish market.
That's some pretty cool information, Steve. I appreciate it, man. I love all the exact values, of course, but the January deal, I guess it makes sense. As you're going over it, it's like momentum's everything, right? You got to take out the beginning of the year for everybody to get in that mode. It makes sense. Even I love how sometimes that technicals, it just makes sense. It does. Steve, I appreciate it, man. Have a great night. We look forward to the program tomorrow. I appreciate it, man, and go Panthers out there.
Thanks, Tommy. Take care.
Thanks, Steve. Take care.